Most traders only see the outcome of a trade and don't understand what happens before the button is pressed. In this video, I will break down 2 real trades step by step: the logic, entry, exit, and the key mistakes. If it's important for you to understand the market rather than guess the direction, the link to my Telegram is in the description. There I share real trades and entry logic every day. The first thing I want to point out is how we choose a currency pair. I've already talked about this in previous videos. We look at the payout percentage, the profitability. If it's above 85–95%, that's much better. If it's below 80%, I personally don't risk it. You can see the payout yourself here. So again, we work with proven pairs that bring stable profitability to traders. What do we do first? We choose our currency pair and then look at the hourly time frame. This is a classic approach. You can clearly see a strong uptrend here. The level has been reached almost the maximum and price continues higher. Let's look at the impulse on a shorter time frame. You can see that the impulse is calming down a bit. There are still small breakouts upward, but overall price reached this area and is now gradually moving slightly downward. This is a kind of short-term dynamic that fluctuates. There's a slight downward movement. Let's look at the movement throughout the day. We are not rushing anywhere. During the day, price gradually increased and reached the maximum. Now we are looking at it on a minute time frame. This is the daily time frame, but earlier we were looking at the hourly time frame and daily one. It was my mistake. Price reached this maximum and now is moving within a mid-range. It may break higher, that's possible. But at the moment, on the minute chart, there is a downwards impulse. I think we'll open a trade soon. Again, how did I choose this asset? I want to talk about that. High payout, the chart at the moment, there is a general upward tendency. Right now, price is fluctuating slightly downward, but overall there is upward pulsation. The chart is clear to me. It's very important to understand the chart. If you see heavy consolidation, constant falls, breakout, and rapidly changing conditions, don't risk, don't enter. Choose clearly currency pair. You must clearly see market structure levels, impulses, and pullbacks. Here you can see a double bottom forming and price reached this peak and now is fluctuating. Again, I think it will aim for this level and then move higher. Therefore, we can open a trade. A key point before entering is understanding when to enter. First, identify the trend and uptrend. Support and resistance levels. Here is resistance and here are support levels. Again, a pullback to the level. From here, price should move up again. This is a pullback to the level. Candle behavior is also important. Small candles indicate slowing momentum. A lower wick shows that seller pushed price down but couldn't hold it. For example, this was a good signal for an upward reversal, and we are seeing a similar situation forming here now. A clear picture forms in different parts on the chart, and we can draw conclusions. As for the entry moment, we don't rush. We wait until the candle touches the level, at least slightly lower. It will dip a bit more and then I'll open a buy trade, just a little more. The main thing is not to rush. We don't rush because we can see the behavior, it's fluctuating up and down. At this moment, we can open a buy trade and wait. think it will continue to pulse upwards. There's a fairly long candle wick, and overall the situation is still moving upward. So we open the trade based on this candle's level. You can see the current tendency is upward. There's a small pullback, but I don't think it will break the level. It shouldn't break. 3 consecutive bullish candles usually don't break like that. The tendency is still aiming upward. We entered on a small pullback, and now price is moving up quite confidently. I'm not going to close anything manually. I'm waiting for the situation to develop. There may be some volatility, price could dip slightly, but then it should return upward. It won't form a large bearish candle. Again, we enter with the trend from a level after a pullback at the moment. Buyers appear. It's simple. We execute this very well and closed with a solid profit. It's extremely important to understand these moments. What mistakes could I have made in this trade? For example, entering too early. If I had entered here just because I saw an uptrend, that would be wrong. Instead, I waited for a small pullback and then entered. Even now, you could enter again, but waiting for the candle to grow a bit more, and then catching the pullback upward. We enter with a trend. We don't try to guess individual candles on very short time frame. We trade the trend. You could enter now as well. There's nothing wrong with that. Price is fluctuating, but I think it will at most reach this level. And within the expiration time we set, it will go up. So we wait for the situation to develop. As you can see, volatility is present, but the chart is clear. We identify the trend, enter it after a pullback, and now we wait. Everything is still aiming for this level. I'll draw a line here. And you see how price moves. It should continue upward. The candle wick is large. I think we'll close in profit. Maybe a small one, but still profit. Everything is moving toward this scenario. Price dipped slightly here. Again, look at the candle behavior. We now have 2 consecutive successful trades. Overall, we are still waiting for price to reach this area. Now it's moving strongly upward. I could have waited for a clearer reversal candle here and then entered. I rushed a bit, which increased the risk, but I was still confident because I entered with the trend and I understand the candle behavior here. Possibly the expiration time was too short, 1 minute works, but for pullback 2-3 minutes are better. That gives price enough time to move calmly. This is also an important point. Again, I acted with a bit too much confidence, but I clearly see the trend and I mark the levels. I understand that price could have broken the level, made a false breakout, or moved into consolidation. You always need to leave room for error, but we clearly base our trades on entering with a trend and identify levels. We work with the chart. We never press buttons randomly. This is extremely important. To conclude this video, I want to say that a winning trade is not just about clicking the right button. Before entering a trade, we must choose the pair, look at its chart, check the payout, analyze the trend, analyze the levels, understand candles and their behavior, look across different time frames, set the expiration time and analyze our entry. Even successful trades should be analyzed afterwards. You saw that I closed 2 winning trades and then analyzed what I could have done better. This is very important. If you learn to analyze your trades in detail, your level as a trader will only improve. This is important and it will help you trade consistently in profit. I'm glad you were with me today. As I said, price reached this level and then continued upward, a clear uptrend. Everything is simple. We analyze and understand the chart, and these 2 successful trades are proof of that. I'm glad you were with me. See you in the next videos. Bye!